You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
That music means it is time once again for the Option Block, everyone's favorite. I know it's my favorite. Hopefully it's your favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. If I sound a little bit different, not coming at you from our usual studio in Chicago. Nope, I'm down here in scenic and unseasonably warm Washington, D.C. for the Securities Traders Association Market Structure Conference. I dare you to say that many times in a row. It's a challenge, listeners. But it's a fun one, fun conference, a lot of great guests. You're going to be seeing those conversations I'm having hitting the network ever so soon. So hopefully, listeners, you guys will get a chance to check all that out. And it will all be good stuff. Speaking of good stuff, we got some good stuff in store for you. I apologize for the lack of a live stream today, but unfortunately, with these conferences, the mobile connectivity sometimes isn't what we desire here. But don't worry, you'll get it obviously on demand, where all of you are hopefully listening to this right now and hopefully joining me on the program. If all the technology gods are smiling, let's start off over there in the land of St. Charles. Uncle Mike, sir, what is popping off in your neck of the woods? How are things, sir?
All is well. It's a great day to be alive as per usual, and that's what's going on.
All right. And also joining us, the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, how are things in the land of the pit, sir?
The pit is going okay. Things are good, and then hunting season's coming because we're replaced by, instead of clam boats, I'm hearing guys like practice with their guns. So there you go.
Oh, well, there you go. Just like downtown, only a little bit more dire when you hear them in downtown Chicago.
There's a little more real estate out here for people to shoot. Chicago, sadly, a little too congested for that.
A little bit too congested. And last but not least, once again, the Song of Ice and Fire. You know, Colin, the last emperor, promised us the double duty this week. Apparently, he can't live up to his promises. But don't worry. We got the Song of Ice and Fire himself, Mr. Colin Songer, holding down the Fidelity hot seat today. Mr. Song of Ice and Fire, how go things in your neck of the woods, sir?
Yeah, New Hampshire's it's a little wet. We got a little bit of rain going, but it's not too bad. It's just kind of cooling things off. But outside of that, not too bad.
Glad to hear it, sir. All right, well, not too bad. Ring it in your ears, listeners. Let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. It's one of those days, crazy stuff happening, a lot going on. I'm in here chatting with a bunch of people throughout the day. Hard to stay glued to my screens, but what a week. What did you guys do? I go away for a couple of days to DC, and apparently you guys have broken the market in my absence. What did you guys do?
Are you asking us in general, or are you blaming Fidelity, or are you blaming TOSAW?
Yes, the collective you. I'm blaming all of you. All of you collectively have broken the market. Not today. The market actually up a little bit today, up about 0.5% in the S&P, about 0.75% in the NASDAQ, and about a little more than 0.1% in the Dow. But still, a lot was broken. Earlier this week, massive sell-offs yesterday. Our old friend VIX Cash at a 19.5 right now. That puts it up, up about 3 points exactly from where it was last show. But we saw a 20 handle. So Andrew, our friend Mr. Brian, who was playing the crystal ball with us this week or last week, I should say, on Vol Views, he emailed me immediately. As soon as I hit a 20 handle, he was like, what do I win? What do I win? I had to tell him, hold your horses. It's got to be there at the end of the week. It doesn't have to just touch it once. So he expected his Tesla in his driveway for winning that second. I said, we'll see.
Touching is not when the show airs. He does not know who runs that show.
Yes, he does not. But yeah, he's a first timer. I could see his enthusiasm. But yeah, that's the challenge, right? Anyone could pick it touching something once. Getting it where it's going to settle out at the end of the week, that's a challenge. And that's where the men separate from the boys. This week, though, the vol is separating from everything. VVIX up to, it's about still 100. So it's about almost exactly unched, which is interesting, even though it has been some movement in the vol spray. So old friend VXX also up quite a bit, up to about 26, up over 2 handles from last show. So a lot popping off. Of course, big sell-off this week. On Wednesday, that was the biggest drop we've seen in a little over a month, about a month and a half or so, since late August. So a big sell-off out there. TOSAW spooking the market almost single-handedly. So that's what happens. I go away for a couple of days, listeners, and these guys managed to break the market in my absence. Since I unfairly maligned him, let's start with him. Uncle Mike, sir, what did you do to spook the market this week?
You know what? I think that there's a lot of things that are, I'm doing air quotes right now, spooking the market. I think that the call with a Ukrainian leader, that might be spooking the market a little bit. I think that just in general, some things that are going on, I think it's a lot of littles right now that are spooking things. And a lot of littles, I think, aren't really major things. I think this is just a good old-fashioned pullback. I mean, after all, we were at all-time highs recently. I think I have mentioned that on this show. I do think that with the brokers eliminating commissions, I do think that with the downturn in stocks in the brokerage sector, that's definitely played a part in this. But once again, I don't think it's a huge part because brokers really don't make a huge amount of money off of commissions anyway. I mean, they definitely make money off of them, of course, but it's typically not the mainstay of how they earn their money, depending on the broker, of course. So I think we have that. And so I think there's just a lot of littles going on, and all these littles, they're littles. What I am noticing in this pattern is that now that there's another Trump investigation going on because he's colluding with the Ukraine to mess with Biden and going berserk in press conferences. But now magically we're getting some type of a trade deal that's going to happen with China again. We just got a big lawsuit in the European Union that was in our favor. And or the World Trade Organization gave us a big lawsuit in our favor. And magically, this has all happened after a 4% pullback in the marketplace. About a 3% pullback in the marketplace. So I'm noticing a pattern here over the course of these last couple of years. And that's kind of what I'm seeing right now. Now, does that mean the market's going to come back? No. Never does. It took a while for it to come back last fall when we had the pullback. But one thing that seems to happen is that whenever there's bad news, we magically start making progress in the China talks. And by bad news, meaning news the market may or may not like. So that's kind of what I'm seeing right now. And I think it's if you're bullish right now, it's a great time to be selling some puts or some put spreads if, of course, you are bullish. And I'm talking in general.
All right. Yeah, Colin, he kind of mentioned it, the elephant in the room these days. I'm down here at this equities market structure conference, and no one can shut up about the brokerage space right now. It's all the rage. That's all anyone can talk about, even guests coming through who are in other parts of the other industries entirely, futures, other things, talking about what's going on with the brokerage battle. I know it's a little bit outside of your purview sitting there in New Hampshire. You're not pulling the switch on and making the decision on the no commissions or not. But what are your thoughts on what the heck's going on out here? Obviously, it's a pretty tumultuous time in the brokerage space. And then also, as a result, what the heck are people trading over there in the land of Fidelity, sir?
Yeah, it's definitely is. It might have hit a few headlines over the past couple of days. So there is a slight focus on that. And I mean, outside of that, interesting enough, when we look at what customers are trading and focus on outside of that, to be candid with it, there's a lot of just normal names on here. I pulled it up, and usually we have that assortment of name that you pull up you've never heard of, so you gotta look it up. I didn't have any today. So interesting enough, Pop Spot, Tesla. There was some disappointment in their deliveries that they announced there. So when we look at that, Tesla earlier, bringing them up right here. So there was 64% of the orders placed by Fidelity customers were buys. Even with Tesla trading at $228.66, which is down $14.47, which is just under down 6%. So it's right now it's below all its moving averages. I mean, right now as well, it is right around that 50-day moving average, but nonetheless below all its moving averages. And as you would kind of expect, the call to put ratio today was a little bit more aggressive on the put side. So 1 call to 1.38 puts being traded compared to its 90-day average of 1 to 1.18 put. So a little bit more aggressive on the put side. Apple making the second spot. And Apple has 55% of the orders being placed by Fidelity customers being buy orders. It's currently trading 220 spot 41, which is $1.45 up, which is 0.2%. So it's still above its 50 and 200-day moving average, and it's starting to work its way back above that 20-day moving average. So once again, trying to regain that particular level. And the call to put ratio being right in line with its 90-day average as well. The one that I would say that has kind of consistently been hitting this list is that TVIX, that velocity shares, 2 times short-term VIX futures that's been trading. 47% of the orders placed by Fidelity customers have been buy orders. So below that average, which that means a majority of them, 53% being sell orders. Right now it's trading 15 spot 81, which is down about 70 cents, which is over 4% down. It's below its 20-day moving average, but it's worked itself back above the 20. And initially, when we open up, was above the 50 as well. But with the activity that's been going on, it's starting to make its way right around that level. So be interesting to see if it can still hold that level. Next on the list, Amazon. So once again, as you see, there's a theme here. So Amazon right now, 63% of the orders placed by Fidelity customers are buy orders. That was earlier. Right now it's trading 17, 14, and 74 cents. So it's up $1.50, which is just spot 0.9%. Interesting enough, with Amazon, even with the bullish behavior we're seeing here, it's still below all its major moving averages, and obviously a little bit more, I would say, pronounced earlier today. It's pushing on the bottom of that Bollinger Band down. So the call to put ratio for its volume today had 1.34 calls to every 1 put, which is right in line with its 90-day average. And lastly, SPY making the list. Interesting enough, now this is a ETF, the Spider ETF that tries to mimic the movement in the S&P 500. So SPY currently is trading at 289.27, which is up $1.22, which is about 0.4%. 63% of the orders placed by Fidelity customer were buy orders. Right now, I mean, this is something that I've been monitoring, is the fact that it broke through its below its 50-day moving average, but it's still above its 200-day moving average. And the call to put ratio being a little bit more aggressive with the puts, but not much. For every 1 call it's traded, it's 1 spot, 6-7 puts traded versus its 90-day average of 1 call to every 1 spot, 5-9 put. So that's what our Fidelity customers have been trading so far today. And like I said, a lot of regulars on there.
Just maybe. Yeah, got some old names we've heard of like Amazon and a few others lighting it up as well. Interesting times out here in the marketplace. Mr. Rock Lobster, sir, what is coming across your radar from the depth of the options mecca known as Maine, sir?
So 2 things. One, we kind of had that sell-off on more bad data. But it stopped, right? Like, we had a bit of a turnaround, even this morning before we heard any plunge protection team, stuff. And the other thing is, I'm starting to see a bit of a pullback in the vol in the October cycle. So, I wrote a blog last week about the best VIX indicator. I think it was my best blog, most viewed blog ever. It turned out to be fairly prescient. Well, you can get lucky every once in a while. But right now, the one thing about vol, you want it, in order for it to go up, you need to see, a pretty good move. Like today, we're down 1%, we're up 0.5%. So there's enough intraday movement, certainly to justify a 20 VIX. But we need to keep that going. I'm starting to see the October options. So if you want to follow something or follow volatility, the near-term active VIX, not necessarily the weekly, because I don't think there's liquidity is really there yet. But like that October cycle is very sensitive, super sensitive. And right now, like, I'm starting to see the bid for the vol, it's kind of sinking a little bit. Without the follow through, it's anyway, a little contraction. So we got a payroll number tomorrow. But, this was kind of an odd collection of things happening. And to be honest, it's not a whole lot different than the impeachment trial that we had, 4 weeks ago, because there was Russia. And now it's like, Ukraine and Russia getting a lot of headlines in the last couple of years. But as far as all this goes, like, I don't think there's really anything new. Now, the slowdown is new. So maybe I think the biggest thing is that, this trade war, which is not really ending, I don't even see how there's a way out of it, because the Chinese are like, we're just not going to do anything. We'll just do what we want. And we'll see how long it lasts. It will last as long as at least, this president, I guess, until somebody else decides to try something different if this doesn't work. So I think, if we actually start to actually slow down a little bit, although the Fed seems like they're trying to get ahead of it in any way they can, I think that became like a concern, like, oh, wow, the economy is slowing down. Because if you think about it, there's been like a big deregulation push, but now all of a sudden, and that helps with business, uncertainty. But then when you throw all the tariffs on top, now everybody's a little bit uncertain again. Do I put a plan here? Do I do this here? Do I do that there? So it's almost like one problem was solved, yet we've got a new one. And, as far as growth goes, we got to get past that. And I think that's kind of the market is sort of here, where, rates are low. Generally, we rally when rates are low. So I just like to see something sort of. We need the dam to break to kind of get us moving again, or at least have something run in a positive direction. The impeachment show could go on for probably at least until the next election, I would guess. I don't know. So everybody's kind of used to that by now, I think. But keep an eye on the short-term VIX. I am seeing the vol drift down a little bit in there. Like sensitive calls like the 19s, 20s, 21s, stuff like that has a little bit of, that's kind of where when people want to buy stuff, that's where they go. And it just looks like that vol is coming out of it just a little bit. Not a ton, but a little bit.
Not a ton, but a little bit. Maybe that's another title here for our show. Here I am. I'm naming all your VIX zones. The least you can do is give me some titles for the shows, right, Mr. Rock Lobster? That's only fair, I think.
Well, I appreciate that.
All right, let's look and see what else the folks are lighting it up out here. Ironically, maybe a little bit different than you expect. The broad indices doing some decent paper this week. Volatility products and VIX in particular, not so much. VIX coming into Showtime had done about 185, so shy of the 200,000 level. The ADV is well north of 500,000, so not even threatening really the 500,000 or even half of the ADV level coming into Showtime, which is interesting given what's going on out there. The indices, though, are where the action is today. SPY was at about 2.5 million coming into Showtime. The ADV is right around 3, so we're already closing in on a day's worth of volume already. In SPY, SPX, similar story, a little bit less, about 850 on the tape, 850,000, of course. The ADV about 1.3 million, so a little bit north of half of the ADV there. The Q's over, just a tick over 500,000 contracts. The ADV about 655 out there, and the Russell, aka IWM. We'll get into RUT and all that good stuff in a little bit on TWIFO. But right now, IWM do about 207,000, the ADV 515,000. So weird pockets of activity, not so much in the small caps, not so much in the volatility products, but in the large caps, you can see some action out there. Let's see what's going on in the most actives. And over there, we're actually seeing a little bit of paper out there, which is kind of interesting. In the last show, it was kind of light. I think in our top 10, all it took was about 70,000 contracts to break into the top 10. Not the case today, a little bit more than that on the tape. Roku hitting the number 10 spot with 118,000 contracts. Number 9, Amazon, $123. Number 8, Netflix, $132 on the tape. Number 7, good old Snap with $160. Snap on the top 10. That's kind of interesting. Have to see what's popping off out there. Number 6, Facebook, $170 going up out there. Hot on its heels. Number 5, Microsoft, 172,000. Number 4, Bank of America, 176,000. Number 3, AMD, 254. Number 2 here, Tesla, good old Tesla, making some news again and some paper, 301,000. And round out the top 10, number 1 with a bullet yet again, trading actively, good old Apple, almost 500,000 contracts, 450 on the tape. So a very robust day for Apple out there. Speaking of robust days, let's see if we got one with the rest of the show. Let's keep on rolling right on into the Odd Block. All right, everybody, welcome to the Odd Block. This is, of course, the portion of the program where we break down some weird, wild, wonderful, whimsical. Also, on occasion, we like to look back. And that's what we're doing today. As I mentioned, we're down here in the mobile studio in Washington, D.C. So not a lot of time to parse flow from today, even though from the quick glance I got, not a ton out there from the size, print, or really unusual print perspective. So we're going to go back and pay off some of the names that we've looked at recently here on the show. We're going to go back to July right now, kick things off out there in everyone's favorite name. Of course, you know exactly where I'm going. Yeah, I'm going there. I'm going ETRN. Everyone's favorite. This is Equitrans Midstream Corp, ticker symbol ETRN. And I won't give you today's level yet because that's kind of a spoiler for maybe how this trade worked out. But back on July 29th on the show, we profiled some pretty aggressive upside call love to the tune of the SEP 20s, lighting it up for 25 cents pretty much throughout the day. A big print caught our eye then. It was 74.85 of the SEP 20 calls going up for 25 cents. This was opening over there on NYSE ARCA. We saw a total of, let's see here, Where's that flow? There we go. About 8,300 or so going up on that day. So quite a few more, about 800, 700 and change more piling in after that big block. So a decent chunk. There were earnings coming up right after this trade, I think the next day. And the stock closed on the 29th close to $18, $17.94. So it seemed like it was a decent out-of-the-money play. That's what we talked about. A little aggressive, but hey, it's earnings season. That's what we see out there. See some aggressive rolls of the dice. And 20 by in a day or so, because that's when that trade was going to pay off. And by the day, I think I even said back then, it was pretty much a binary trade. We would know in a day or two whether those calls were worth something or what they were at a nickel. It sounds like it was the latter, listeners, when all this went off, because the stock pretty much immediately after that trade, right after the earnings, it kind of fell off a cliff and never looked back. In fact, going into expiration in September, it expired. The stock closed $13.64. So these 20-handle calls never really had a prayer. And go figure, they were still open on expiration to the tune of about 8,600, still open on that strike. And they never really traded again for size after that. I mean, a couple of hundred lots there, but pretty much they opened up about 8,000 on that OI, and they never really touched it again. They were swinging for those fences, and unfortunately, those fences were not within range for them. So it looks like this customer at least tossed away close to $200K, about $187,000 on a pretty aggressive earnings swing for the fences. Mr. Rocklops, he tells these people not to do this. They still do it. So what do you got to say here for our friend who threw away about $200K swinging for them their fences in everyone's favorite name, ETRN?
We always have to find the ones that are right on the tip of everybody's tongue, right? Isn't that what we try to do?
Well, you wake up in the morning, you take your shower, you have your coffee, and what do? You check maybe VIX, SPY, and ETRN. That's like everyone's routine, right?
Exactly. You people, they like taking a shot. Some clients, they like to play, that was a pretty big shot though, I think. But earnings, I like the before earnings trade. I like the after earnings trade. I'm never really super thrilled with the earnings trade. Even just as a liquidity provider, you went through earnings like a zillion earnings. I trade 150 stocks. You've got, earnings, 4 earnings cycles a year. That's 600 earnings go around. You do that for years and years and years, and you just watch them just blow up all over the place. So I think it's more reliable to trade into the earnings. In a bull market, stocks like to go up into earnings usually, and in a bear market, the opposite. And then, after earnings, maybe a trend, some more reliable vol to sell, like a little bit easier trade to manage overall, I think. But this one is just a classic, I'm going to buy them. I think I'm going to make, $4 a contract, and then I'll just goes, piffly poo.
That the technical term, piffly poo?
Piffly poo, I don't know if that's going to be the title of the show. That sounds kind of like a little too PG for our sponsor, but.
How does one even spell piffly poo? Yes, the piffly poo of options. I could see it now. Let's see if we can improve upon the piffly poo with our next name. So far, we're 0-1, listeners. Let's see. Next up, we have a trade we profiled, another size one. This one up on July 25th. This was a size call PALOOZA in Sirius XM, ticker symbol Siri. It's a big one, Mr. Rock Lobster, when it gets the Flow Master excited. When he gets popping off about something, it's an interesting one. And he wrote in that day, he's the one who called our attention to this name, saying there was serious, I think he just likes to make a pun too. He said there was serious call buying in Sirius pre-earnings. You see what he did there? He's a pretty clever fellow.
Well, you know what? I'll bet you it wasn't even the Flow Master that wrote it. It's probably what's the guy that works with them that he always talks about,
Fruffy, Mr. Fruffy. It could have been Mr. Fruffy.
Yeah, it could have been Ruffy. I think Ruffy's the one with the wit, and I'm totally throwing shade at the Flow Master, even though he's a very good guy.
You are. He's listening right now. He's going to be typing to you as soon as he finishes listening to this, because
Because he doesn't screw around either. He's like, that guy, get him off the air. But
I think it was him because I actually made a comment about that. I said, "How's Mr. Ruffy?" And he's like, "Oh, I wrote that." he wanted credit for his serious pun. So I do believe that was him.
Well, I think his product is seriously good. He's a seriously good guy. And, and we got Sirius XM radio, which has probably been a $5 stock for 500 years.
Yeah, well, someone was betting that it was going to move, right? At the time, he wrote up the call volume was 20 times normal, leading puts 80-1. It was all AUG6 calls, lighting it up. We profiled a big block of 25,000 going up for 31 cents. It was on the bid, but don't read into that. There's a lot of paper going up that day, so there's sitting offers and bids there that kind of skew how these trades look like they're executed. But we saw more going up. At the time the Flowmaster wrote it up, there was nearly 40,000 contracts on the day, over 70,000 traded. So just a freaking ton, I think is the technical term, of these AUG6 calls. Yes, it's a $6 stock, listeners. So 70+ thousand contracts going up. OI going up about 53,000. So not all opening. Obviously some back and forth and you're getting that much paper. But still, I think the technical term was a freaking ton of these went up. And let's see. If these were buying, and it looks like a lot of them were, at least that's how the Flowmaster looked at them on. He priced them up with a VWAP, which is a value-weighted average price, listeners, of around 32 cents for the bulk of them. So if that was the case, because fast forward to expiration in August, and guess what? Guess what was the big open strike, Mr. Rocklot? I bet you can't guess.
The 6?
Yes, 48,910 of the AUG 6s were still open as of August expiration. So, unfortunately, let's assume most of those were buying, and I think we safely can, at least around that 50,000 lot or so. So let's just use that Flowmaster's number of 32 cents. That puts us around at least 1.6 million that somebody probably shed on this pretty aggressive upside swing of the bat. I know you could say, hey, maybe they were doing it against stock and they were short in stock, and maybe this was some sort of funky, very expensive hedge against a cheap stock popping. That would be a waste of money in my opinion, but either way, so they could have done it that way. Either way, they lost a lot of money on the calls, Mr. Rock Lobster, to the tune of well north of 1.5 million. So it seems like we're 0 for 2, sir. You're bad luck today.
It is my fault that the person didn't make any money. Although shortly after they would have made some money. You know what? Maybe it's Howard Stern. Maybe he's, he writes some calls so he could do something with his Siri stock. Didn't he get like a bajillion shares like 5 or 10 years ago or something like that of Siri? So I think, maybe this is like I said, this could be a bobble trade for him. Didn't we have a bobble trade before? I mean, I guess I don't think he was the buyer, obviously, but maybe when they need somebody to sell calls, they go to him. They go, hey, Howard, and your girlfriend needs a new bobble. Why don't you sell some calls to my customer? He's like, okay, what's 100,000 or 400 or 500,000 shares to me? It means nothing.
It means nothing. It's weird. These calls may have actually gotten a little bit of value because it looks like they almost pretty much pinned. It was $5.97 the day before August expiration, and the day of August expiration it closed at $6.08. So they had 8 cents of meat on them. Even if they got that, that's still obviously not enough to cover the 20 to 32 cents you lost. And of course, that means this guy probably woke up with a hell of a lot of stock, maybe that Monday. I don't know if that was his intention or not. If that's the case, then maybe Mr. Rock Lobster, I guess, there could be a happier note to this, because if he wrote out the storm after that, then you're right, the stock did turn around. So maybe we can be positive. We could say that he got the stock that he wanted, he paid 32 cents for, and then it rode all the way up to about 650 on September 11th, and he dumped it right there at the top. What do you think?
It always could happen. Some people just want to be long. So which is perfectly fine if that is your investment horizon. You just got to make sure that you can hold on to a trade long enough to be right before the option goes away. That's really the hard part.
That's the hard part, right? These things have an expiration date. That's what makes them so fun and so challenging. Let's see if we can go. So that one could have been, I guess, technically, if you really take a rose-colored glasses view of it, could have been all right. Probably not. It's probably the former, where he shed about $1.6 million. But hey, we can be charitable here. We're not. Just because Mr. Rock Lobster is a curmudgeon doesn't mean I have to be. All right, let's see if we can go. Let's see if we can have one clear winner here. Let's go to the last one. All July. July was a rock'em sock'em time, Mr. Rocklabs. This one also on July 25th from our show. We were talking about good old GoPro. Ticker symbol, of course, GPRO. I'm not going to tell you where this one is trading right now either, because that's also a spoiler. But at the time, back on the show on the 25th, we profiled a bit of a PALOOZA in GoPro. So we have a theme here. We have losers, A, but B, flyers on relatively cheapy stocks. And this one, GoPro at the time, AUG 6 calls for 15 cents, gobbling up the offer 7,500 times. Interesting enough to watch. Worth noting, though, they did do this one against stock. They did trade these for, let's see, a stock 188,000 shares at 5 1/4. Actually, not even a 5 1/4, 5.23. So they did do a little bit of stock against these. So looks like probably roughly delta neutral. And let's see, the earnings were the first after the bell. Let's see, because these ones actually, I've been busy here. I haven't had a chance to go back and look. Let's see where we were on AUG expiration for GoPro. Oh, Mr. Rock Lobster, looks like 401. The stock went out on earnings day. So they did it. I'm guessing, Mr. Rock Lobster, they're going to maybe wish that they did those calls with 1-to-1 stock. That probably would have been a little bit better. What do you think?
I think so too. It's, GoPro is everything. Remember when it was like the short squeeze darling? I don't know. It was like a $60 or $70 stock, like 4 years ago or something. And I've been struggling ever since, even though everybody kind of likes their product. You use their phone and you use their camera instead of your phone. Because it's easier to replace the camera than it is your phone. So I think they were kind of wishing they did a 1-to-1. Because GoPro is down 20% today.
Yeah, taking another drubbing today. Yeah, it's off. It's down to 412 now, off $1. So I haven't looked today what the news is, if they had some sort of announcement today, or I know they had cameras recently. Maybe the street not liking those. But either way, yeah, taking another beating today. And why are you doing delta neutral calls going into earnings? I'm not a fan of that, really. I mean, I think you need a nice vol pop, and how often are you getting that after earnings, right?
You could get it, through the earnings. It's just you got to pay so much right then, right? It's a tough trade. It doesn't mean it can't work, but I don't know if that would be TOSAW approved, if it would make it through the TOSAW risk grinder. I don't know if that would make it.
Yeah, I mean, delta neutral trying to trade effectively vol, and you're right. You're locking in an exorbitantly high level of vol right before earnings, and then you really got to have it just knock it out of the park to make any money back on that trade.
Yeah, to break even, right? I mean, to break even, you need huge.
And I'll even add this to the GoPros. To GoPro, I became a non-GoPro person when you realized you can buy an imitation GoPro at Walmart for like $40, $50. So combine that, even with the high vol, then not a fan.
Yeah, that's always been my problem with the GoPro sector, too, because they kind of treat them like they're great action cams. Obviously, that's what they're for. And they're quasi-disposable, but they're like $400 to $600. So it's not that disposable. If I'm going to go do something crazy that might break my camera, I'm probably going to buy that cheapy one. You're right, because if I destroy it, not the end of the world. For when I'm doing all of my crazy skateboard grinding and base jumping, which, I'm always doing over here. Speaking of what we're doing... What are you laughing at, sir? I do all my base jumping. When I'm not talking to you, I'm base jumping nonstop.
I'm just imagining you I just imagine you grinding on a skateboard. I'm just watching that, and I'm watching Gene saying, "No, don't try that again." I just had some sort of nightmare scenario in my head.
You have shows to do. Stop all this base jumping and skateboard grinding. You have shows to do. All right, and we have questions to answer, so let's get to them with a little bit of your mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. It's that time of the week. Mr. Colin, I know you kind of got swapped in here last minute. We like to look and see if there's any interesting questions in Fidelity land. Anything interesting coming across your radar this week before we get into some of our own listener mailbag, which is pretty hefty, sir?
No, it wasn't really much of a common theme. It's been pretty focused on just normal stuff. There've been few usual concerns when you see a downturn about how about the hedging piece? Those usually pop up when you get hard sell-off days, but really not too much out of the norm.
Yeah, people like to buy puts when the market's down 400 or 500. Go figure how that tends to work out. But yes, that does seem to be a common refrain in markets like we're seeing this week. All right, next up, we got a comment here from Robert Rouse. I like the name. Coming in via YouTube. More of you enjoying the show, consuming our shows via YouTube. I've said it before. It's not our intention. We're happy you like it there, but we don't really put them out there. It kind of is an automated service of our distribution platform. It puts it out to other platforms, including YouTube, and it makes it actually pretty palatable. It puts a nice image, static image up there so you can, obviously it's not a visual show, so you get that nice static image so you can listen to the show. So more of you seem to be enjoying it there. You're welcome to do so. I think we got to tweak some of our stuff around. Some of our transitions seem to be setting off some copyright flags over there, so we got to go fix those because YouTube's a stickler for those. It's never been our go-to platform, but if you guys like it, we'll make sure maybe we get more content out there for you because it seems like more and more of you. I know at your event, Mr. Rock Lobster, a lot of your hardcores in your pit chat were coming up to me asking me, hey, you're going to get more stuff on YouTube. That seems to be the way a certain cadre of the hardcore audience likes to consume options these days. In fact, I know you guys are doing more YouTube. Isn't that correct, Mr. Rock Lobster?
We are. We're trying to put out like one a week. So I have to figure out how to do a simple YouTube type of video for people because I keep forgetting, that most people don't know how to trade options. So I just assume everybody does. And I start, let's just say, running off of the mouth on some of this stuff. So we are doing a little more though. So. I mean, we're getting some views.
Yeah, it's interesting because that's always been the knock on video too, right? Is that people want a short form, 2-minute or less kind of nugget, and we obviously like to do a lot of the. Someone's actually calling me in the middle of that show. Don't they know I'm doing a show right now? How rude of them. All right. But yeah, what did Robert say? Robert said, thanks, guys. Well, you're welcome, Robert. He says, I'm listening every day, and I'm looking up the stuff that I don't understand. I like to hear that. Well done. I like to challenge our listeners a little bit. And so if you have something you don't understand, you can always write in. You can always also look it up. Contact your broker. Contact guys like Colin and them over there on the Fidelity Strategy Desk. Yeah, ask them your questions. That's a good place to learn. I'm glad you guys are enjoying it via the YouTubes. We'll try to make sure you guys get some more over there. All right, Ninjy. Next up, Ninjy. Oh, this is what I was just talking about, Rock Lobster. He says, looks like Brian won the crystal ball this week. No, I told this to Brian. I will tell it to you, Ninjy. It is not a game of what can VIX touch throughout the week. That is not the game. We can all play that game. It is where will VIX be at the end, and spikes, of course, at the end of the crystal ball, which is the end of showtime on Volatility Views, which is 2 p.m. Central. So that is the challenge. Not the close, not the beginning of the show. God knows I've been there where I'm winning at the beginning of the show, and then it rudely rips victory from my grasp and hands it to somebody like the Rock Lobster. I mean, can you imagine that? So unfortunately, Brian has not yet. He claimed victory as well. So I guess he's smart in that sense, Mr. Rock Lobster. He has learned to claim victory early, which is a key part of the crystal ball game.
Just declare your victory and split. Yes, I think he actually, because he is a veteran of the network now, he knows how to get around your benign dictatorship.
Yes, the most benign of dictatorships. All we do is base jump and grind skateboards all day when we're not creating fine options content for you folks out there. All right. Or Colin, I should say, Jerry's asking the question everyone's asking us. We kind of talk about it on the top of the show. I don't think it's in your pay grade to make this decision, but we'll put it to you nonetheless. Jerry wants to know, is Fidelity going free to play like the rest of the big brokers? So, Mr. Colin, here it is. Break some news. The floor is yours, sir. Make that decision for us.
I wish I could make that decision. As you stated, that's a decision that's made by way above my pay grade. So, we just asked everyone to be as patient as possible, and we're just hoping some kind of announcement will come out soon. So, we're just waiting on that word. Usually, people out there usually find out before we do. So.
They are a savvy bunch out there, floating around the old interwebs and their social medias, picking up rumors here and there. But yeah, Jerry, well, as soon as we know, we'll let you know. I'm sure those conversations are going on as we speak. Different brokerage firms, and we've had this conversation with firms down here as well. They go after different clientele. Not everybody wants to go after just that, quote unquote Robin Hood-esque small client. They want some go to more active, more sophisticated types of clientele, and then those clientele are happy to pay. Sometimes they're not. So it depends on where you're going after, what kind of service you're offering as well. Not everyone's in that, race to zero commissions, but the way the fee structures are set up in the space, maybe there is some wiggle room there. Interesting stuff. Certainly the game is afoot right now in the retail brokerage space. All right. What do we got here? Oh, this is kind of a timely one from WDE Pert. WDE Pert. He or she asking, why are you guys against trading options on cheap stocks? Don't they serve a purpose regardless of the price of the underlying? Oh, this is kind of a timely one. We were just talking about a lot of unusual options activity on very cheap names. And unfortunately, all of them lost a ton of money. So maybe that's why we're against it. No, Mr. Viceroy, I know, was very against it. Uncle Mike, I think you're kind of lukewarm on it. I don't know if you're as stringent as the Viceroy used to be on like nothing south of $10. He wouldn't even touch an option on it. What is your line of demarcation? And then also, why don't you answer for Mr. W.D. Burt? Why are you so personally against options on cheap stocks, sir?
Well, I'm not necessarily against the options on cheap stocks. I'm just typically against cheap stocks. So it's hard to want to trade options on cheap stocks, and you don't even want to be around cheap stocks. So that's kind of my issue with it. The problem I have with it is that you're going to be paying more of it, even though it is. It's typically going to be, when you add it all up, a further bid-ask spread percentage-wise a lot of times. You are going to be paying a commission on more option contracts than normal. So right there, you have things stacked against you right away with doing an option on a cheaper stock. Now, keep in mind, just because it's cheap doesn't mean it doesn't pack a big punch. If you want to trade futures options on natural gas, then that's not, dollar-wise, that's not very much, but from the size of the actual contracts, it's very significant. So I'm just against it because of the two disadvantages that you have right away. It's percentage-wise, typically a worse bid-ask spread, and you're going to have to buy more contracts, and when you buy more contracts, you're going to have to pay more commissions. And there is no brokerage that's gotten rid of option commissions, by the way, at least one that I know of. You're going to at least have to pay exchange fees. There's going to be something that you have to pay more of, even when you trade options. So there's no free lunch in terms of the option space with that. So with it, I just think that those disadvantages when you're trying to do something like trade options, it really works against you. And also because they're not quite as liquid typically, when they're not quite as liquid, you're going to have a harder time getting the price you want. So there's just a lot of things that go against you with it. Now, if you're selling some puts to get into a stock that's $4 and you're selling the $4 puts and you know that you're just going to hold them until you get into it, then the only problem I would have with that is that you're trying to buy a $4 stock. But from an option standpoint, I wouldn't have a problem with that. But typically, if you're trying to be an active option trader, when you have those two things against you, the additional commissions because you have to buy more contracts, and the percentage-wise, typically less favorable bid-ask spread, there's other ways to make money where you don't have to take on those two disadvantages.
Mr. Song of Ice and Fire, I have to imagine you get similar questions every now and then over there on the active trader strategy desk. What is it you tell people? And what do you have to say to Mr. Pert, who wants to know why we have such a grudge against options on cheap stocks, sir?
The first usually, my first answer is usually going to be dealing with that bid-ask spread. So nothing different stated here. It's usually the same concerns, that bid-ask spread that can make that really daunting. Right? It's real easy to get in, but boy, is it hard to get out when you need to. A lot of times is really the idea, there's a reason why it's trading at that particular level. It didn't get there just out of, why not? Let's start it here. So a lot of that goes into play as well. And a lot of times, there is potential for getting the kind of price movement that you want, but there's also that same risk that goes along with that as well. So whenever going through that, a lot of that liquidity concerns comes into play when I look at that, and also the reason of why is it trading down. There's usually a reason why it's trading down there. So, not necessarily I'm against it, but I would just say make sure you're aware of the risks and rewards of approaching something like that, and make sure it's worthwhile.
Yeah, Mr. WDE Pert, we're not morally opposed to trading options on cheap names just for all the issues we just put out there. There's a lot of things you have to be aware of when you're doing that. And at a certain point, we see people out there paying 35, 45, 55 cents for options that last 3 months on a stock that's $3.32. At a certain point, you have to say, well, wait a minute. Why don't you just buy some of the underlying instead? Because you get a much longer time horizon at least, right? So there's a lot to be said for that as well. The relative value, the relative bang for your buck of what you're getting out there as well, and the time horizon you're getting. So there's a lot of issues to be cognizant of when you're trading cheap options, I should say, on cheap stocks. And also a lot of things you got to be cognizant of in this market, which is why we have our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we do exactly that. We go around the block. We go around the horn here, see what everyone's focusing on for the rest of this week into the weekend. I'm down here in D.C., so I'm going to be focusing on a lot of equity market structure. Lucky me. But let's see what the rest of my cohorts here have in order. Let's start with the Rock Lobster. Mr. Rock Lobster, sir, Zone of the Monk, the Dark Alley Zone. Where are we hanging out right now, and what are you paying attention to into the weekend?
I think we're in the Dark Alley Zone. We could not get into the Danger Zone.
Oh, so close. You know you had that Kenny Loggins queued up, ready to go. You know you had it.
I of course, they'd probably take you off the air if you played a Kenny Loggins song. They'd be coming after you, So once again, I'm just going to say probably for the third or fourth time in the last 3 months, since June maybe, we were not able to hold or even get into for more than a day the danger zone, which is always key, right? It's my biggest point of all this is there are no new problems, kind of what TOSAW said. It's kind of the same old problems. We have the continual impeachment. We have the continual trade war. Now the only difference is we have actual potential slowdown. I don't know if that was Boeing or, Boeing and GM at the same time, maybe causing bad numbers, but we got, a few more bad ones today. But anyway, sorry. Option Pit, what are we doing? What the heck are we doing? Vol Newsletter doing okay. Option Pit doing okay, and we're rolling out. We are rolling out our silver product is going to be new and improved. A lot more about educational as far as like going through an entire trade from beginning to end, kind of all written out, and so people can just learn how to trade options. You could learn relatively inexpensively by just following along. So anyway, that's what we got going on at Option.
All right. Well, I guess since the Rock Lobster made the executive decision to turn Around the Block into a combo segment, we will keep that alive. Mr. Uncle Mike, sir, what are you watching for the rest of this week? And also, to follow the Rock Lobster, also, if folks want to learn more about what's cooking in the land of St. Charles, where should they go? What should they do?
Well, what I'm watching the rest of the week, I think in some ways you could say we have market balance. We can, whenever the market needs to go down, the news can start blaring about impeachment. And when the market needs to go up, the news can start blaring about how we have progress in the China trade war, or they can go the opposite way with both ways. So maybe it's a way with which for CNN and Fox News to kind of balance themselves out more. And that's the new version of the Bulls and the Bears with it. Who knows? So yeah, watching the news, watching those things, and wanting to see, and of course we have non-farm coming up, so wanting to see where that is. So for the most part, those things. And if you would like to work with a financial advisor who actually uses options and is not afraid of options, and will give you comprehensive financial advice for the long term in terms of retirement advice, building your nest egg, things like that you get from most financial advisors, but someone who will actually do stuff with options as well mixed into that. give me a call or shoot me an email. Go to stcharleswealth.com for more information, or you can call me directly, 630-885-0017. And that is how you can find me.
All right, and last but not least, take us home, Mr. Song of Ice and Fire. What are you paying attention to for the rest of this week? And also, if folks want to learn more, they want to reach out, maybe they have questions about options on cheap stocks or a lot of the other questions we got today, where should they go? What should they do?
Sure. So a couple things I'm watching. I know we've already got a lot of data out this week, but I'm going to be watching just the employment situation coming out, as well as some of the numbers coming out for the price index, the consumer price index. I'll be interested to see how much that is impacting there. I'm also watching the 30-year yield on treasuries. It's hovering right above that 2%. So that's kind of an interesting level to see there. And I think this goes without saying, is especially after today's action, as always, when we watching kind of the S&P, is it going to make a decision in the direction it's going to make? Is it going to try and push its way back up to that 50-day moving average? Or is it going to do kind of a meet and greet with the 200-day moving average down below? So it'd be interesting to see, especially with it sitting on the bottom piece of that Bollinger Band, to see what happens from here. If people are interested to, whether it's run their ideas out there or even try to get more education, whether it's about reading charts or option strategies or option concepts, certainly visit us at fidelity.com/options. We have many resources online to help them with various topics, as well as you could always call in. You can run these things by us. That's exactly why we're here. Ask to speak with a trading strategy desk. Hey, you could even ask to speak directly with me. I'm here to help out in any way that I can. And the way to contact us is calling 877-907-4429.
There you go. Reach out to them. Ask for the Song of Ice and Fire. They'll know exactly who you're talking about because there's only one. Fidelity.com/options is the place to go. Kick the tires and light the fires. And if you have a question, reach out to that active trader strategy desk. Ask for them. They're happy to help you out. And on behalf of the Song of Ice and Fire and Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to them. I guess for enjoying it on YouTube. Have fun there as well. And we'll see you back here, not live, but in a little bit for TWIFO. We'll be doing TWIFO down here as well. And then back here tomorrow for volatility views. Maybe we can work some magic here with the conference connectivity to make the Wi-Fi, or I should say make the live happen for vol views. And if not, you definitely get it on demand, of course. And we'll be back in the studio on Monday to do it all again on the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.